This is volatility 100. It is running, and this is what I'm going to explain to you guys in account management. As you can see, what the lot says I'm using with VIX 100. Today I'm going to talk about something very important in our trading career, bro. So, and all this I'm basing on what you have been texting back to me, like in your comment there. I've been reading your comments. Hello traders, welcome back. This is Two Men FX, guys. So bye Two Men, as usual, guys. Welcome back to this channel. This is the most amazing channel. We are here to learn, guys. So for today I've come up with something good. I think, guys, this screen is not new to you, but it is different. Just take your time. It is a different screen. And for today I'm gonna talk about something very important in our trading career, bro. So, and all this I'm basing on what you have been texting back to me, like in your comment there. I've been reading your comments, and today I'm going to reply to each and every person explaining to what you have been asking about very well, so that you can understand. And even that one who doesn't know, even that one who didn't ask, but basing on what you ask, is gonna learn from this. So as I told you, in Forex, we are not selfish. If we are selfish, that means I would have not known about Forex, because those guys would have mind like that. Because sincerely speaking, I started learning Forex from YouTube, and I made money. All my money is from Forex, but I learned from YouTube. I got introduction from YouTube, and I made money with Forex. So without going far, man, so if you're ready,
2, 1, go.
Alright, guys, as I'm here, let's start with I've been reading through your comments, bro, and I decided to reply some of those which I like. Some people are asking, like the recent ones actually on this very video. I've come up with this very strategy, and I'm going to reply to some of your comments. So guys, next time keep on commenting. I will always reply to you. I was like replying through the comment section there, but it's not a good thing that's supposed to be done, because it's now like someone asks about something, instead of explaining within at least like 1 minute, you just write yes both. That's not enough, but I tell you always, yes, you can use it. But today I've decided to come with this video explaining to you on this very same strategy, and also telling you some more things about Forex that you have been asking me. So for today, guys, actually there is a comment that I read that made me run crazy, and it was like, such people in the world are still there. I'm not gonna tell you the name, but this guy said that if you're making a lot of money like that, then why are you sharing the strategy, guys? That is what I've been telling you ever since, from day one. You get it? From day one. That never be selfish. Why do you want to be selfish, bro? Selfish in this world. God is the one giving us each and everything, and he can take them all in less than a minute. He didn't give us this thing, didn't give us this knowledge, he didn't give us this money to be selfish. Let's share the idea, let's share the strategies, and we make money together, man. That's why I always come with some live tradings, and we see what's gonna happen with the market, guys. Okay, most of the comments are so interesting and educative. Like my boy Rick said, which broker do you use trading boom and VIX coach? And this is in the previous videos that it was like I had to answer here and recording. And Ricky, I shared with you the links of the indicators that I use to trade both indices, boom and crash pairs inclusive, and also to trade Forex pairs. So those links are just in the video description below. Just go check, tap on the links, go open up your live account plus a demo account with these brokers, make money. So before you open up a real account, go open up a demo account try the strategy on demo account, perfect your strategy, and then come deposit money and double your accounts. I go on another guy, Rogers, like, does it have to be only a strong blue line in the market facilitation or also a strong green one? Yeah, Rogers, I told you both. We have Augustine. Augustine was like, do we consider the trend while trading this strategy? How do we check the trend while trading with the strategy? Yeah, I told you this very well. I'm going to come to it. In the meantime, another guy said, Ali, I don't know, said, bro, any video about money management? Of course, bro, as I told you, I will include it on the next video. This is the very video I'm going to explain everything about money management, risk money management, the better word. So Alexander said that I was asking, nice strategy, please can it work on crash 300 and boom 300? Yeah, bro, all boom and crash pairs. That's how I replied to you, and it works on all pairs of boom and 300. I'll get for you some entries. I'll show you some perfect entries or some good entries that I would have taken on boom 300 and crash 300. I will come to it another time to come in this very video. And when we go on, there is, yeah, Ricky again said that, thank you for the powerful strategy, coach. Too many fakes. Do some strategies. Stop working after some time. Yeah, bro, I know it, man. You know, I've been making this account like sleeping too much. I've been making you guys sleeping, but it's time to wake up. It's time to make money. Let's make money for holidays that feature big holidays in the whole world which are coming. That is Christmas holidays. They are coming, and man, it's better we have some cash in the pocket. So I totally have a lot of strategies for you guys, only still fixing some time, but all of them are for you and all for free. Yeah, man, that's it. All of them are for you and for free. I have a lot of, so actually before this strategy, man, I mean for this this public reply to you guys, I had recorded already a video about a new strategy which is very powerful. I have a lot of strategies, but of course I have to give one by one when I get time to record. As you know, guys, this thing is too big for me. Recording, after recording, I have to edit, after editing, I have to post. You get it? And it's not that after recording you post lyric. No, you record, edit, post. It's a bit big thing for me, so I fixed time for you guys. So whatever you have to do for me is just go hit that subscribe button, like the video, share the video, and that's all I want to get from you. And let's use the strategies to make money. All right, for the beginning, I think I already replied to you, Ricky, about the brokers. Just check the links below this video and make money with those brokers, man. Just let's make money from them. Let's make money from those brokers. So Alexander was like, nice strategy, please can it work on crash 300 and boom 300? Yeah, bro, let me go straight on boom 300. Yeah, boom 300. This is boom 300. Boom 300 is a bit disgusting, but it has good money. So on boom 300, I will always recommend to you guys, just enter the trade and spend there only 2 minutes. Those are 2 candlesticks of 1 minute. Okay, 2 candlesticks of 1 minute. As let me see here, as I told, we zoom once, we zoom twice, zoom once, zoom twice. We got our conditions here happen, man, and just enter a trade. 1 2, you're out. Boom, this is boom 300. 1 2, you're out. We go. Let me check, let me get for you another one. Look at this, man. Look at this. Our blue line and black moving averages, they crossed above our green line of envelopes, and you enter. Take only 2, guys. Don't look at all this one. That take only 2. 2 are enough. 1 2, you're out. That's enough. They all say that 1 by 1 makes a bundle. That's when I grew up planning it, and they used to tell me about it. 1 by 1 makes a bundle, and have met it in real life with trading. See, yeah, that's enough. Let me check on crash 300. Crash 300. See what is happening. Do you think there is any money here? I will tell you in the video to come. Look at this, bro. See what is happening. All our conditions met. So our moving averages, all of them crossed below our red line of our envelopes, and that means we buy. You enter the market, take only 2. You're out of the market. As you know, boom, 300 and cross 300, they give like too much pips in less time, and 2 candlesticks are enough for you. But for this strategy, I recommend you to trade 1,000 and 500. They are the best with this strategy, guys. You get it? 1,000 and 500. They are the best. But with 300 you can, but it's a bit risky. Thank you. I want to go on another guy. Who is that? Rogers. No, let me go. Yeah, let me go on Rogers. Rogers, you are like, does it have to be only a strong blue line in the market facilitation or also a strong green one? Yeah, bro, I will tell you that always consider both lanes. What all the lanes tell you, always when the lane spike all the way up with a spike on the market, consider them. Okay, value those lanes, don't undermine those lanes. So like here, man, you see there's an entry here, bro. You see what is going to happen? Blue line has already crossed above our green line, so it is a moving average. Green moving average has already crossed above our green line of our envelopes, and now a black line is approaching. It's also approaching our green line of envelopes. That means anytime once I see a good condition coming, I enter a trade. Very soon we enter a trade and make money. And when we come here, you see this is a green line, it's spiked all the way up. And when you see this is a blue line, it's spiked all the way up, going up, following what the market is doing. Let's go back, test these lines. See, this is a green line, it's spiked all the way up and money came in. Look at this, money came in. These are 2 green lines. Let's go on a blue line like this, man. But here there was no entry because this was moving all the way and all the way down. This is a green line, yes. And the market kept going down. Why? It spiked all the way up and the market kept moving down. Let's go. Yeah, here you see this is a blue line. Wow, this is perfect. This is what I've been telling you guys. See, this is a blue line. See, blue line spiked all the way up, and our indicators gave us an indication that we enter a trade. When we enter a trade, we just make money and we are out. That's why I tell you always consider all the lanes. Okay, when I go, so where should I go? So guessing, do we consider the trend while trading this strategy? How do we check that trend while trading this strategy? Yes, bro, I told you that never use any indicator strategy without checking the trend or trading against the trend. All indicator strategies work best following the trend. Know that, guys. There is no indicator strategy that works by not following the trend. You get it? Check trends from 1 hour or from 30-minute time frames and below. That means you can start from 30, you can start from 1 hour, sloping down. Since we are scalping on 1 minute, we don't need to go on daily time frames. We don't need to go on 4-hour time frames. 1 hour and 30 minutes are enough for us to be our high time frame. So for now, let me go straight. I'm not gonna enter this trade because guys have a lot of things to tell you, and I'm not gonna be focused on this one thing. Have a lot to explain, and I may enter a trade, a delay to close, make a loss. As I check now, you see this is volatility 100. It is running, and this is what I'm going to explain to you guys in account management. As you can see, what the lot size I'm using with VIX 100, this lot size is very small, but is enough for me. With account management, the account can grow higher and higher. You see, 0.05 total of $1 lot size, and I'm now in profits. I can even close, but I don't think my take profit is already hit. Let me see. I'm not scalping this, guys. Don't think I'm scalping. Entered it basing on 30 minutes, and you see there was a pullback. Bit pullback here. So you see where my stop loss is. Entered somewhere here, entered a bit late, but it's not a problem because I was sure that the market will go all the way somewhere here, and my take profit is going to be somewhere there. Okay guys, back to business. Boom 1000. I was boom 1000. So good, we are now on trend. How to check a trend, guys? This is boom 300, boom 1000, and this is how we check trend on boom 1000. As you can see, you can zoom out completely, you zoom in once, that's enough for you, because you know we are using phones. I don't bring here strategies, guys, using computers, using laptops or PCs. Why? Because most of us, we start from using phones, we make money using phones, and we go buy PCs, machines to use in trading. That's why I bring most of my strategies, like we use phones. This is how. So when you're checking trend, you don't consider your indicators on your indicator window 1, but we consider only the moving average. This is the use of the moving average on the main chart, and this is what happened, guys. First and foremost, I think, guys, you know about support and resistance levels. So when I come here and I say this is my support, that is my resistance level, and this is my support level. As you see, from here, the market came all the way down, and when it reached somewhere here, it went again up. That means it respected this support level. Just was a small breakout, but I think that was a fake breakout, and it went all the way up, going up. This is money, and with boom, we don't enter trades where the market is going up. You get it? So that is one way how you can check a trend using this strategy. Another way is using the moving average. When using this is how you use the moving average. When using the moving average, you consider, or you enter the market when the moving average is above and the market is trending below the moving average. Only you avoid entering the market, or you entering the trade when the market is in consolidation, like here. This was not a good entry for us. No entry there I would have taken, because the market is in consolidating. After the breakout, I would have started entering somewhere here, and I take my profits. Since we are not holding, this power is nonsense, Ben. Since we are not holding, I keep entering until when I reach somewhere here, I stop looking for entries. That's it. And so the point is, for boom 1000, you enter the trade when the market is boom 1000, boom 1000, boom 500, and boom 300. You enter a trade when the market is below the moving average. So for crash, let me give you another example. I think you can see here. You enter the trade when the market is trending below, and when the market comes a bit down, you stop looking for entries. Let me highlight for you this level so that I can show you how money would have been made. One minute, we check on 1 minute. Checking on 1 minute, where is a box that I drew? See what I've been telling you, guys? See, you start from here. See, the market, the indicators gave us an entry. You enter a trade, you go all the way down. See, all the way down. Another entry, you go all the way down. This is the advantage of not trading against the trend, or scalping against the trend. Never scalp boom and crash when the market is spiking. Okay, let me show you another thing on crash. This is crash 1000, crash 500, and crash 300. You check a trend on 30 minutes. So for crash, we buy, and I think you can see here. See, the market is above the moving average. For crash, when the market is above the moving average on the main chart, it's when you get entries, or you look for entries. You get it? So when you look for entries, and I would have started looking for entries somewhere here, I stopped looking for entries somewhere there. Why? Because that is something like a resistance level that can push the market down. You get it? So you look for some entries from somewhere here to that level, because it is now trending above the moving average. Let me get another one. Let me get this is the best thing I've been telling always: avoid entering a trade when the market is consolidating. See, somewhere here you can make a big loss, you can make money with this strategy, but don't enter a trade when the market is consolidating. That's nice. So let me show an example of how they have made a big loss trading against the trend. Since this is crash, we are selling. So let me go on 1 minute, and I think you have seen it very well. See, the market is moving down below our moving average. That means we are not looking for entries anymore until the market starts going up. This is what I mean. See, and we start looking entries when the moving average is above is below the market in real time. So let me go on 1 minute and check what has been happening there. We're looking for the second box. Where are you? This is it. So starting from somewhere here, see what is happening, guys. Never get any entry when the market is going down. You see how it is spiking, giving a small move space, giving a small move space. That's it. I think I got seen you are now okay with how to check a trend before entering any trade using indicators at large. So going now to my brother Ali, yeah. And Ali was like, bro, Ali, my brother, I'm gonna tell you each and everything you wanna know about risk management. I may not be perfect, but at least I will try. Like, you're like, bro, any video about money management? Yeah. In trading, we always have what we call risk money management, guys. Without risk money management, you can blow your account in less than an hour. That's it. Because we predict this market that is going to go up, we buy. And when we buy, we expect a loss or we expect profit. So once the market goes against you and you didn't use a proper risk management, that means your account is blown up. So let me show you this example. Like, I'm gonna show you how risk management works. Like, let's assume we have a $100 account, and with this $100 account, we have a dream or vision of making it thousands or 100,000 or millions, or we have a dream of making it $500,000, or we have a dream of making it, let me say, like, okay, $200. Okay, no matter how long, no matter when, but we have that dream. So with this $100 account, we have a dream of making money or doubling this account. So what do? Let me say, like, in my trading career, not me, but I'm using an example. Trading career, like 50%, we have a 50% win rate. So with this 50% win rate, let me say, like, you have, like, out of 10, you have 5 losses and 5 wins. You get it? 5 wins, 5 losses, 5 wins. But with proper risk management, you remain profitable. But without that, the account, you can blow it, because you can face like 3 consecutive losses and you face like the rest wins. You can make money with proper risk management. But without proper risk management, 3 consecutive losses, they blow up your account. So let me say, like, we use like risk reward ratio of 1 to 2. What do I mean with risk reward ratio of 1 to 2? You're risking, like, your stop loss is worth $5. You get $5, and with this risk reward ratio of 1 to 2, your target must be $10. You get $10. So this is risk reward ratio of 1 to 2. If your stop loss is worth $1, that means our 1 to 2 is $2. And with this, guys, what I want to tell you is you have always to have discipline in the market. you always have to be with trading rules. Don't be too greedy. Okay, don't be too greedy. Trading rules whereby you can say my daily target is $2. After a week, daily target is $5. After a week, daily target is $20. But sometimes if you don't have discipline in this, you can reach $25. You say, no, this is enough. And not yet enough. I'm gonna hold. Guess what? In less than 5 minutes, you already blow, and you're like on $5. The money is decreasing. Why? Because the market, you're not the one moving it, but it's the one moving itself. So always have discipline in the market. If your target is $5, that's enough. Wait for another day. Okay, so let's assume now we're still on risk management. So let's assume we have my brother A and my brother B. My brother A is having a $100 account. All of us will have $100 accounts, okay? And my brother A is risking 50% of his account. That means 50% of his account, $100 account, is risking $50 on a trade. What do I mean by $50 on a trade? $50 on a trade is like he has entered a trade and his stop loss is worth $50. That means he's risking 50% of his trade. Okay, and when we go like my brother B, for him is having $100 account also, and he's risking 1%. 1%, that means this man is risking $1 per trade. You get $1 per trade. That means his stop loss is worth his stop loss is worth $1. That means even if my brother B meets, let me say, like 5 consecutive losses, this man will remain having his account. But if my brother A meets like just two consecutive losses, then his account is blown. That means you'll be having 0 and he is gone, but my brother B will be still in the market. That's the power of risk management. And when we go, let me show you with you how to risk with 1%. I think you have understood what I've been telling you guys. Okay, as I told you, we have our account with $100 equity. We have just deposited $100 in your account, and you have a vision of making it to 200. And with this, we are just risking 1%. Okay, 1% of our capital. That means each and every trade we take, we risk $1. And with this, guys, sorry, let me take some water. Wow, that's nice. With this, guys, don't enter a trade more than 3 times. Why? Because if you enter a trade more than 3 times, that means you will want to risk $1. You want to risk 1%. You risk more than 1%. And we have to risk 1%. This one, 1%. Okay? So when we are risking 1%, that means each and every trade we take, we have to risk $1. And how do you know that you're risking $1? Let me say like the market is moving like this. Okay, so let me show you on boom and crash, but I would like this to work based on volatility 75. The market is moving like this. You get? It's moving like this, and when it reaches somewhere there, you see it has started making higher highs. That means the trend is changing. You may find there is some level, like a support level from this side, and the market is now going up. Okay, so now you're like, I want to enter this trade, but my trading rules say that I have to risk $1 or 1% of my equity, and with 1% of my equity, that means you have to risk $1. So you decide to enter the market somewhere there. This is our entry. Sorry, I'm not good at writing green, but that's it. That's our entry, man. You get? That's our entry, and our stop loss is somewhere there. So our stop loss, our stop loss is somewhere here, how do you know that I have to use this? I have to use this lot size. It will be worth $1. Okay, and now when you check, like, stop loss is just below where you want it, anywhere where you want it to be, and you just get your crossbar. I think you know how to use that crossbar and how to get the pips. So you calculate pips from here to here. Let's say like there are 5 pips. Okay, 5 pips. And with this, so how do you know that I have to use 5 pips? Okay, so let me say like the lot size is, I'm just giving examples, bro. So let's say that you want to use the lot size of 0.2. I'm going to use this lot size because it works best also on boom and crash, and it is the very low lot size that you can use on most of the boom and crash pairs. So you say 0.2 times 5 pips. That's how much? 0.2 times 5 pips. That is $1. That is $1. That means if I'm to enter this trade where my stop loss is and where my entry is, I have to risk 0.2. Proper risk management. And just in case the trade goes against us, I will just lose $1 and I will remain with $99. That means my account is still safe. So for the other guy who was risking 50%, that means he was supposed to risk, like, he had to use a bigger lot size, whereby he had to use like too much lot size, and he was risking $50. That means if the trader goes against him, this guy would have mined with only $50. You see the difference, guys? That is a very big difference. Okay, so let me say like we are now on boom. Okay, let's say boom, and the market has been spiking like that, but you find like there is your resistance level above there, and with the resistance level the market says, okay, I'm going down, starts moving down, and our moving average, which was down here, okay, it comes up. And here our market facilitation, our envelopes, our moving average, they start showing us like an entry. We enter a trade. When we enter a trade, we just calculate very fast, guys. You have always to calculate very fast. As for this boom and crash, I just advise you always, you enter the market immediately with 0.2 lot size, the smallest lot size. You come down. Let's use an example of the stop loss. Like, it gives you a stop loss of 2 pips, because as you know, boom and crash, they give low pips. So guys, with only 2 pips, as usual, boom and crash, 2 pips, whatever. So 2 pips, you just calculate very fast. You have to be very fast, man. You get it? So you just say 0.2 times 2. Yeah. So you say 0.2 times 2 pips. What's the answer, man? That's around 0.4. That means you are supposed to risk 0.4. You get? So with 0.4, you say, let me say like if you risk 0.2, if you risk 0.2 lot size, that means you will lose only 0.4. That is 1%. It's not 1%, but I mean it's below 1%. So how many lot size are you supposed to put in to make 1%? So you just say, since 0.2 is equal to 0.4, say that means 0.4 is equal to 0.8 cents. And what's the balance to make $1? That's around 0.2 cents. And that means that is around, you are supposed to use the lot size of 0.1 so that you can lose 0.2 cents, the balance. So the total lot size you are supposed to use on this, so that you can, your 1% is disciplined, you use 0.5 lot size. That's the lot size you are supposed to use when your stop loss is 2 pips. You get it, guys? That's it. Very simple and very easy to understand. So let me go back in the recap about this thing. I would like to tell you that don't risk more than 1% of your capital, guys. This thing you can even get 10 consecutive losses, but with 10 consecutive losses, with proper risk management of 1%, that means you just have lost $10 and your balance is $90. You get, very simple. But if you're risking too much, let me say like you're risking $10, you get 10% of your account. That means 10 consecutive losses, that is account being blown up. You go all the way down. And number 2 is that number of trades that you open refers to your stop loss level. This is a very good point. The number of trades that you open refers to your stop loss level. For example, as I told you that, let me first clean this. Let's clean it, man. Go. So, with a stop loss of 2 pips, and you enter a trade using the lot size of 0.2, how many trades would you have entered? I can say like 2. 0.2, you add another like 0.3. That's the total of 0.5. You get? So with a stop loss, let me say like you're risking 10% of your account because you trust yourself, you know your strategy is working, your strategy from too many FX is perfect. Say, let me increase my risk, my percentage to 10%. So you're ready to lose 2 pips. Another thing is the higher the stop loss, the less shares you trade. So guys, this is very important. If your stop loss is too big, that means you enter with only one lot size and with a smaller lot size. But if your stop loss is small, that means you will enter with bigger lot size with small lot size, with a small stop loss, like 2 pips, as I've given you an example of 2 pips, and 5 pips. You see the difference. With 5 pips, you enter only with 0.2, but with 2 pips, you enter with 0.5. That's massive, bro. Yeah, thank you for watching, guys. Thank you for watching, guys. Too many FX forever. One love. I love you guys. Thank you for watching my videos. Thank you for the support. Keep commenting. I always come back and tell you what has been happening in the market. I always come and tell you, give you advice. Like, yeah, everything here is for free. Let there be no one telling you that too many FX is selling signals, too many FX is selling strategies. No way. Me, I give you my things for free, because at first, guys, I learned FX for free also on YouTube. So that means if those guys, we are like selfish to ask questions, some guys spent 15 years in trading, yeah, respect, but they were not selfish because they are sharing content which is very helpful to us and helpful to you. Thank you guys for watching. If the video was helpful to you, just hit that subscribe button, hit the like button, just turn on the notification bell so that you cannot miss the next video that I'll be posting very soon. Too many FX forever.